Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The bearish mood continues from Monday into Tuesday as profit taking increases since the retreat from 67 cents. Along with that, the widely expected RBA cash rate was kept unchanged at 4.35% in December. The focus now turns to this week's reports, being the Institute of Supply Management, or the ISM, which will release its November data. And then following that, we've got the key event this Friday, being the non-farm payrolls, with an expected of 185,000 jobs added, following the previous of 150. Looking to the technicals, we're getting very close to this bottom side of the range, somewhere around 65.70. I'm not going to get too negative unless we see a New York close under there, as a bounce could put the market back into focus to 67 cents. But do keep an eye on this level around 65.70. A close under there could give further stop losses to 65.2025. The euro dollar was also weaker as the pattern now strengthens into the fourth consecutive day. Along with that, the US dollar index, which measures the greenback strength against a basket of six major currencies, rebounded and has extended from the lows of 103 to 103.56. With a lot of US data about to be released this week, I still feel the US dollar is on target of eventually reaching its objective around 100 to about 100.50. This would increase demand and therefore see euro re-challenge that topside call around 110 or even onto 111. So I'm not turning bearish yet, even though we have seen 4 negative days, partly from the profit taking once we reach that 110, but I feel we can revisit. Moving on to dollar yen, the market is taking a bit of a breather as the bulls take the challenge back above 147. Looking to the current pattern, the bears are still in play, I feel, as the ADX is trading to a negative case and therefore could eventually see another downturn, with the call still holding at 144.5. Towards 147.5 to around 147.65 should anticipate a bearish response. Pound also a little bit mixed, and as you can see over the last few days, hasn't really broken out of its range. It's still finding good support close towards the bottom side of this range around 126, but resistance still locking or capping around 127. I do feel the market could actually take a further challenge to the upside, and this may give opportunity for the bulls to return and then see a move up to 129. Turning to gold, well, it looks like we may have a blow off top in play. A blow off top is a chart pattern that is notoriously hard to trade given the volatility, volume and the rate of price change, which ultimately leads to a collapse after posting an all-time high around 2,148. Now waits confirmation to this engulfing candle, long shadow, blow off top. A break of 2007 would increase the downside and potentially see a move back towards this bottom side of the range around 1,900. Not quite got the confirmation yet. A break of 2007 and should open the bearish case further. Wrapping up with oil, market was a little bit weaker again into the fourth consecutive day and still likely to see a little bit more weakness. But I feel the market's getting close to a bottom, somewhere around $70, 20.45. And if we do see a bounce from there, could see a correction back towards its top side of 76.20. Well, that's a wrap. Thank you very much for joining me. And as always, look out for the interest rate report. I hope you enjoy the rest of the day.